Smart direction. Direction beats speed. Choose the right long-term financial direction and increase velocity safely. Avoid rapid changes without a plan. Financial success is not a matter of luck or genius. It's a matter of consistent application of proven principles. The principle underlying this concept is simple but powerful. Clarity leads to action, action leads to results, and results lead to confidence. This cycle, repeated over time, transforms your financial situation. Start by understanding the core principle deeply. Most financial advice fails because it's applied superficially. People follow rules without understanding why those rules work. When you understand the underlying logic, you can adapt the principle to your specific situation. You can recognize when to apply it and when to modify it. This flexibility is crucial because personal finance is personal. What works for someone else might not work for you. Implementation requires a system. A system is a set of repeatable processes that produce consistent results. For financial management, your system might include weekly budget reviews, monthly investment contributions, quarterly goal assessments, and annual strategy updates. The specific components matter less than the consistency. A mediocre system followed religiously will outperform a perfect system followed sporadically. Track your implementation. Create metrics that tell you whether you're making progress. These metrics should be specific, measurable, and relevant to your goals. If your goal is to increase net worth, track it monthly. If your goal is to reduce debt, track the balance and the interest paid. Numbers don't lie. They reveal whether your actions are working. Adjust based on feedback. If your metrics show progress, continue. If they show stagnation or decline, investigate. What changed? What assumptions were wrong? What external factors intervened? Make small adjustments and measure again. This iterative process ensures continuous improvement. Build accountability into your system. Share your goals with someone you trust. Report your progress regularly. Accountability creates external pressure that reinforces internal motivation. When you know someone will ask about your progress, you're more likely to take action. Remember that financial improvement is a marathon, not a sprint. There will be setbacks. Markets will decline. Unexpected expenses will arise. Jobs will be lost. The key is to maintain your discipline through these challenges. Your system should be robust enough to survive bad times and flexible enough to capitalize on good times. Subscribe to Finance Wise Insight for actionable strategies that turn principles into profits. Wealth building is fundamentally about making good decisions consistently over time. Each financial decision is an opportunity to move closer to or further from your goals. The quality of your decisions depends on the quality of your information, the clarity of your goals, and the discipline of your execution. Information quality matters because decisions based on bad information lead to bad outcomes. Seek reliable sources. Cross-check facts. Be skeptical of claims that sound too good to be true. In finance, if something sounds too good to be true, it usually is. Develop the habit of asking, what's the catch? What are the risks? What am I not being told? Goal clarity matters because vague goals lead to vague actions. Instead of saying, I want to be wealthy, specify what wealth means to you. Is it a certain net worth? A certain passive income? The ability to retire at a certain age? Once you define wealth precisely, you can work backward to determine what actions will get you there. Execution discipline matters because knowing what to do is worthless if you don't do it. The gap between knowledge and action is where most financial plans fail. Bridge this gap by making your desired actions as easy as possible. Automate investments. Set up alerts for bill payments. Remove friction from good financial behaviors and add friction to bad ones. Financial success also requires emotional regulation. Money triggers powerful emotions: fear, greed, envy, pride. These emotions can override rational decision-making. Develop the ability to recognize when emotions are influencing your choices. Create rules that govern your behavior during emotional states. For example, never make an investment decision when you're feeling euphoric or panicked. Wait 24 hours and reassess.